Welcome to Iron Financial. This is the place where we help you forge a stronger portfolio and teach you how to cut right through the market weakness. Today, we're putting a company under the forge, and I mean we are running a full-scale, top-to-bottom stress test. The company is Rigetti Computing, ticker RGTI. Now, they just dropped their Q4 2025 earnings, and folks, the numbers? Well, they tell a story of immense, world-changing ambition clashing with some absolutely brutal financial realities. Our job today is to figure out if this company's structure is built on solid bedrock or if it's sitting on shifting sand. Let's get to it. So first things first, you have to understand the blueprint here. You really do. Rigetti isn't trying to build a better photo-sharing app or some cheap widget. No, their stated mission, their whole reason for being, is to build the world's most powerful computers to help solve humanity's most important and pressing problems. Think about that for a second. We're not talking about small problems. We are talking about things like cracking fusion energy, revolutionizing drug discovery, and building climate models that could actually save us. This is nation-state-level technology. It's the kind of stuff that could literally redefine entire industries, maybe even our way of life. The potential here, it's monumental, a machine that could change the world. But you know, a blueprint is just a piece of paper until it's actually built and paid for. And right there, that's where our pressure test begins. Change the world? You know, that's a great slogan. Fine. But let's bring this grand vision all the way back down to earth for a moment. For the fourth quarter of 2025, with all of that ambition, with all that talk of solving humanity's problems, Rigetti brought in just $1.87 million in revenue. $1.87 million. That is the cold, hard number we have to start with. It is a massive, gaping disconnect between the grand vision and the current cash flow. And that gap right there, that is where investment theses are either forged in steel or they are shattered into a million pieces.
Exactly. And that gap is the absolute core of our stress test today. So here's how we're going to break it down. We'll start by examining that fundamental conflict, the quantum blueprint versus the cash burn. Then we're going to apply some serious pressure to the financials, really look for the cracks in that foundation. After that, we're going to test the core technology itself. Are they actually forging technological steel here? Then we'll inspect the commercial framework, the structure that's supposed to connect that incredible tech to the market. And this all leads up to the final showdown, the bull case versus the bear case. And we'll end it all with our verdict. Is Rigetti Computing a real opportunity or is it just an elaborate trap?
Okay, let's dive right into this first phase of the test, quantum blueprint or cash burn. Look, this is the fundamental trade-off you face with any deep tech, truly revolutionary company. You are funding a vision that, if it works, could be worth trillions. But you are paying a very real price for that vision right here, right now, in cold, hard cash. The question you have to ask yourself as an investor is whether the promise of this quantum blueprint is strong enough to justify the price of the cash inferno it needs to keep running. And this, right here, this is the promise. Just look at this mission statement again. It's not about making something a little bit faster or a little bit cheaper. It's about building a tool to tackle existential challenges. Now, when a company frames its ambition on a scale this massive, the market will grant it a lot of latitude on early financials. They'll give it some room to run. But that patience, believe me, it is not infinite. It has a price, and that price is measured in cash burned quarter after quarter after quarter. They are spending an incredible amount of money to make this mission a reality, and the whole market is watching that fuel gauge. All right, let's put that foundation under the hydraulic press. Promises are cheap. Let's talk about the numbers that aren't. We're going to apply consistent, increasing pressure here to see exactly where the stress fractures start to appear. This is where we separate the hype and the fancy mission statements from the hard assets and liabilities. Because at the end of the day, the balance sheet doesn't lie. Ever. Okay, so here's the top-line scorecard from the Q4 report. Revenue came in at $1.87 million. The crucial point, the one you can't ignore, is that Wall Street was looking for $2.33 million. That is a significant miss. And it's not just a one-off miss, it kind of extends a trend of top-line disappointment, which suggests, maybe they're having trouble closing deals or converting their pipeline. Now, on adjusted earnings per share, they came in at a loss of 3 cents, which, to be fair, was right in line with what everyone expected. So they're managing their expenses to meet those targets, but the top line, the revenue, just isn't showing up the way people hoped, which is a generous way to put it. Let's call it what it is. A revenue miss of this magnitude is the first major crack we're seeing under pressure. It tells you their commercial engine isn't firing on all cylinders. Not even close. And here is the direct consequence of that low revenue. The operating loss for the quarter was $22.6 million. Just let that sink in for a second. They generated less than $2 million in sales, and they spent over $22 million to do it. You can talk about your grand vision all day long, but a business model where you spend more than $10 for every single dollar you bring in the door is fundamentally completely unsustainable without a truly endless supply of capital. So the real question is, how long can you keep that furnace lit? And it gets worse when you zoom out. For the full year of 2025, Rigetti's net loss was a staggering $216.2 million. This isn't just a furnace, it's a cash incinerator. This number right here is the primary pressure point on the entire company structure. That $216 million represents the immense financial weight their technology and their future prospects have to bear. If the revenue doesn't start scaling, and I mean scaling fast, that weight doesn't just become crushing, it pulverizes the entire structure. That's a completely fair point, and the burn rate is, without a doubt, the single biggest risk here. But this is the countermeasure. This is the financial armor that allows the company to withstand that incredible pressure. As of the end of the year, Rigetti had $589.8 million in cash, cash equivalents, and available-for-sale investments. This is their war chest. So at the current burn rate, this is not a company that's going bankrupt next quarter or even next year. This is a substantial runway that allows them to execute their technical roadmap without having to run back to the market, cap in hand, begging for more dilutive capital. It buys them time, and time is the most valuable and most expensive commodity in all of deep tech. So they have the cash to survive for a while, but survival isn't the goal here. Winning is. And that brings us to the next critical phase of our stress test, forging technological steel. The entire investment thesis, the whole justification for that massive cash burn, rests on one thing and one thing only: the strength and the viability of their core technology. Is it truly groundbreaking? Is it actually progressing? Is this the high tensile steel that can form the backbone of a multi-billion-dollar company? Or is it all just brittle iron, waiting to snap? Okay, hold on. Before you go any further, let's make this crystal clear for everyone. The earnings release was just full of technical jargon. Fidelity, qubits, gate speeds, it's a lot. Break that down for us. What in the world is 2-qubit gate fidelity, and why should a regular investor even care about it?
That's a good question. Think of it like this. A qubit is the basic unit of quantum information, right? It's like a bit, a 1 or a 0, in your laptop, but it can be both at once. A gate is just an operation, a calculation, that changes the qubit state. So a 2-qubit gate is a calculation on 2 of them at the same time. Fidelity is just a fancy word for accuracy. How often does the operation give you the right answer versus an error? So higher fidelity simply means a more reliable, less error-prone computer. And that is arguably the single most important metric for figuring out if a quantum computer can ever actually solve a useful problem.
And this, right here, this was the headline number from the report, but it was kind of buried beneath all the scary financials. Rigetti announced they achieved 99.9% 2-qubit gate fidelity on a prototype system. Let's be very, very clear about this. This is a huge deal. That third 9 of fidelity is incredibly difficult to achieve, and it's widely seen in the industry as a critical threshold for getting close to what's called quantum advantage. That's the magic point where a quantum computer can actually outperform a classical supercomputer on a real-world problem. This number, this 99.9%, is the strongest piece of evidence they have that they are forging real, high-grade technological steel. And this is how they're forging that steel. They aren't just designing chips in a lab somewhere. They're actually building them, iterating on them, and perfecting them in-house at their own fabrication facility, which they call Fab 1. They use this proprietary chiplet architecture. So instead of trying to build one massive, monolithic, and really error-prone chip, they build smaller, high-yield chiplets, and then they tile them together like Legos. And according to them, this approach dramatically accelerates their innovation cycle. Design, build, test, repeat. And it gives them a durable, long-term competitive advantage. They control their own supply chain, and they protect their intellectual property. This vertical integration is a core part of their entire strategy to scale effectively. So, let's just lay out the structural beams of their plan. This is their path to quantum advantage, plain and simple. First, achieve fidelity. Well, they just hit a massive 99.9% milestone on a prototype, so you can put a check mark there. Second, demonstrate scale. They're working to deploy a 108-qubit system for customers. And third, prove the architecture. That chiplet tiling approach we just talked about is how they plan to get from 100 qubits to thousands of qubits and beyond. This is the roadmap they're selling to investors. It's clear, it's milestone-driven, and it forms a powerful framework for future success. But, a blueprint is only as good as the builders. Execution is absolutely everything.
Okay, that all sounds impressive. The tech is advancing, I'll give you that. But this isn't a science fair project. It's a publicly traded company. So how do you build a commercial framework around all this? How does 99.9% fidelity and a fancy chiplet architecture translate into actual dollars and cents? Because right now, as we've already established, it's translating into less than $2 million a quarter. Can they actually connect this incredible technology to a paying market?
That's the perfect pivot. And actually, the CEO, Dr. Subodh Kulkarni, gave us the answer directly in the earnings call. Look at this quote. He specifically points to the order from India's C-DAC as proof of increasing engagement from national customers. Now, this is key. These aren't just some random startups. These are sovereign entities, national labs, major research institutions. They are the first wave of customers who need direct on-premises access to this hardware for their own strategic national security level initiatives. This is the beachhead market. And this is not some small research grant or a token collaboration. This is a purchase order for $8.4 million for a single 108-qubit system. Now, think about that. This one single deal is more than their entire revenue for the full year of 2025. It is tangible, it is concrete evidence that there are real customers out there willing to write multi-million-dollar checks for this hardware right now. Okay, but one order does not make a business. When does that $8.4 million actually show up on the income statement? Is it this year, next year, 2027? And how many more of these deals are even in the pipeline? A single big government contract is great, but it can also create a really lumpy and unpredictable revenue stream. I am not convinced this proves a scalable commercial model. Not yet. You're right, one deal isn't a scalable business. It's not. And that's exactly why you have to look at the support structure they're building around the core technology. I mean, look at this list. You see NVIDIA on here? That's the bridge to AI and high-performance computing. You see Quanta Computer? That's their path to manufacturing these things at scale. You see Riverlane? They're tackling error correction, which is a huge problem. This isn't just a company working in a silo. It is the hub of an emerging quantum ecosystem. This is how you de-risk revolutionary technology and build the commercial on-ramps for the future.
And that brings us to the climax of our stress test, the bull versus the bear. We've examined the financials, we've tested the technology, and we've inspected the commercial framework. Now it is time to weigh it all. We're going to lay out both cases, side by side, to really test the overall structural integrity of this entire investment. All right, let's argue the bull case. The foundation here is solid simply because they are sitting on nearly $590 million in cash. That provides years of runway, and it insulates them from any near-term market turbulence. They can execute their plan without desperation. But the bear case starts with the simple fact that Q4 revenue of $1.87 million was a miss. That huge cash pile is completely irrelevant if you can't demonstrate a path to actually growing revenue. The clock is ticking on that cash, and every single disappointing quarter just shortens the runway. The bull sees that clock and points directly to the technology. That 99.9% fidelity milestone is a powerful signal of tangible world-class progress. You invest today to capture the value of that technological leadership tomorrow. This is not a company you value on trailing revenues. The bear hears that and points right back to the quarterly operating loss of $22.6 million. That is the cost of that technological progress, and it is immense. The cash burn is elevated, and it shows absolutely no signs of slowing down. That's a huge structural flaw in the financial model. While the bull case counters by highlighting the key partnerships with industry titans like NVIDIA and Quanta. These aren't just research projects, they are commercial and integration pathways that de-risk the future and open up massive addressable markets. They are building the on-ramps for widespread adoption. And the bear case points out that commercial quantum advantage, the entire point of this whole endeavor, has no firm timeline. Is it 2 years away? 5 years? 10? That massive uncertainty makes it nearly impossible to model future cash flows and assigns an enormous risk premium to the stock. It is a speculative bet on a breakthrough with a completely unknown date. Finally, the bulls will argue that government contracts, like that $8.4 million C-DAC deal, anchor near-term revenue and they validate the technology. It provides a baseline of business while they work toward broader commercialization. And the bears will fire right back that this so-called anchor actually reveals the biggest weakness, a dangerous dependence on government funding. This creates immense concentration risk. What happens when government budgets are cut or when a competitor underbids them on the next big contract? A diversified commercial customer base is a fortress. A reliance on a few government deals is a vulnerability just waiting to be exploited.
So there you have it, the bull and the bear case, laid completely bare. The structure has been tested from every single angle. We've seen the financial cracks, but we've also seen the technological steel. Now we come to the verdict. Is this an opportunity, or is it a trap? Ultimately, our analysis concludes that this is the essence of Rigetti. It is a pure-play, high-risk, high-reward investment where cutting-edge, validated technology is in a direct head-to-head race against a ticking financial clock. The bulls are betting that the technology will achieve quantum advantage before the cash runs out. The bears are betting that the cash burn will force dilution or failure before the technology can ever be commercialized at scale. The entire investment thesis balances on that knife's edge. So we leave you with the final question, the one that you have to answer for your own portfolio. Based on this stress test, is Rigetti Computing a quantum fortress built with a deep cash moat and a core of technological steel, or is it a house of cards, beautiful and ambitious but destined to collapse under its own incredible financial weight? The evidence is on the table. The choice is yours. Thank you for joining us at Iron Financial.
Quick disclaimer, everything I share is for entertainment and informational purposes only. I'm not a financial advisor, so please do your own research or talk to a professional before making any moves with your money.